Hi folks, you're tuned into Business Today. I'm Sakshi Batra. Well, the earnings season has kick-started with the big IT bellwethers reporting their Q4 results first, and investors are looking at plenty of opportunities to look at some good buys amid what looks to be a promising quarter this time. Now, experts believe this time around, Nifty 50 companies may actually log in double-digit profit growth in this quarter. Motilal Oswal Financial Services has indicated that the earnings growth will be largely led by the IT sector, the banking and financials, the oil and gas, metals this time around, while the auto sector, the cement space, consumer and healthcare may actually drag the performance. HDFC Securities in its report has mentioned that banks will report strong growth in net interest income given the strong credit of growth. Also, when you talk about the low provisioning and a decent asset quality can be expected this time around for the entire banking space, especially for the top-notch banking space. Also, the oil and gas space will be in focus in the Q4 results season because upstream companies will definitely benefit from the high realizations on the back of high crude prices that have been seen in the Jan to March quarter. Oil marketing companies may also display better refining margins this time around. Now, for the IT companies, revenue growth is expected to remain strong, driven by accelerated adoption of digital technologies and migration to cloud-based solutions. However, margins may actually come under pressure due to the higher labor costs. Now, HDFC Securities also believes that Tier 1 IT companies, talk about TCS, Infosys, Wipro, HCL Technologies, Tech Mahindra, together these may actually report over 20% kind of a year-on-year growth in net sales and over 10% year-on-year growth on the profitability front as well in Q4. Also, investors should definitely focus this time in the IT space, especially on the commentary on the outlook, on attrition, the deal environment, the pipeline, the pricing pressures. FY23 revenue and margin guidance also will be important to track before taking a call on where should you be investing on the back of the earnings growth. In the auto sector, however, volume growth of passenger vehicles and commercial vehicles was better than the two-wheelers during the quarter, so one can expect a very divergent kind of a result season in the entire auto sector. You may have the pressure of higher commodity prices, input prices really being felt on the margin front. That may definitely dent the operating margin, but you can expect the passenger vehicle majors, commercial vehicle majors to actually report better set of numbers than the two-wheeler companies this time around. For the FMCG sector also, there could be significant impact of the higher raw material inflation, even though we have seen that the companies have actually responded already with price increases and lower ad spends to control their margins this time around and the profitability too. Pharma companies, on the other hand, may post a modest performance with the input costs rising, the price erosion in US that may impact the profitability in this quarter. India and emerging markets may definitely offer some relief for the pharma companies. However, one may need to see the impact of the war between Ukraine and Russia. What kind of an impact can these companies face on the exports, imports, as well of the medicines, as well as the China lockdown, the fresh lockdowns due to rising cases of COVID in Shanghai. How does that really impact the supply of ingredients and APIs? That will be very keen to watch out for in this quarter and the commentary of the management in the pharma space as well. One space that continued to shine very bright was the metals and the mining space. They may report a bumper quarter, especially for the non-ferrous companies, Hindalco, Vedanta, Hindustan Zinc, due to the firm prices that we have seen, almost record high prices for most of these metals seen in this quarter. Definitely going to be a big positive for them in this season. Telecom companies, Reliance, Jio, Bharti Airtel, Vodafone may actually report sequential revenue growth given the higher average revenue per user this time around. Talk about the capital goods space and the cement space now. These sectors may feel the pressure of higher raw material costs on the margins, profitability. However, the top line is still expected to rise, and for the top-notch companies, the blue chip companies, it may still be much better in terms of earnings in this quarter. So all in all, one can say that you can expect a mixed quarter with the top companies really sailing through with better numbers across the board in Q4.
If you like the video, do like, comment, share and subscribe.